Now with Stephen Carroll. Stephen, we're starting in Argentina. The president coming up with some plans to deal with the country's debt.
Yeah, you might remember back in July, Argentina missed a payment on debts to bondholders who'd accepted a haircut on what they were owed in the wake of the country's financial crisis. Now, this happened because of a US court ruling which ordered Buenos Aires to pay a group of holdout investors, those are the people that didn't accept the haircut deal, $1.5 billion before it made payments to its other creditors. Now, the government has refused to do so, and that pushed it into default for the second time in 13 years. In an effort to restart payments to that majority of bondholders, President Cristina Fernandez has now offered to swap their bonds, which are governed by American law, for new bonds issued under Argentinian law. So this proposal won't solve the dispute with those holdout investors, but it could allow those bondholders to continue being paid.
Very tricky situation there for Argentina. Let's look to the markets next with some news for Apple.
Yeah, shares on Apple hit a record closing price in Wall Street on Tuesday. It closed at $100.53. That's some 30 cents higher than its last closing peak in September 2012. That's a vote of confidence for Chief Executive Tim Cook ahead of a whole range of new product launches scheduled for next month, expected to include the iPhone 6 as well as some wearable technology devices. Now, despite a positive finish on Wall Street overnight, it's a fairly mixed picture in trading in Asia today. You can see the Nikkei there is up just over 0.1%. That's after news that the trade deficit shrunk 6% in July compared to the same period last year. That's as exports continue to rise. Telecom shares, meanwhile, dragging things down in Hong Kong. It's just trading slightly above the flat line.
All right, some news from Russia next. And you might recall we've been talking in the last few days about all sorts of different ramifications of the sanctions on both sides between Russia and Western countries. Now, Stephen, it seems that card payments are being impacted in Russia.
Yeah, that's right. Now, according to Visa and MasterCard, of course, the two biggest operators in that sector, they say the sanctions aren't affecting their business in Russia and card payments are being processed as normal. But reports in the Russian media say banks are there having to pay more to guarantee transactions processed by those card companies. Now, fearful of being cut off from the system, some banks have started looking for alternatives. Siobhan Silk has more.
MasterCard and Visa dominate the Russian credit and debit card market, but there the cost of using the systems is going up, the result of Western sanctions against Moscow. Banks are worried that the sanctions will eventually mean the two US headquartered companies will stop offering services in Russia altogether. For an alternative, Russian banks are looking to neighbouring China and the UnionPay system, already in use in 140 countries.
People here had 100% trust in Visa and MasterCard. Now this trust has been shaken and people are looking for some kind of alternative. The only one right now is the Chinese payment system.
Within the next 3 years, 2 million Russian banking customers will be issued with UnionPay cards, but it's a slow process.
Currently, just over 27,000 places accept China UnionPay cards. That's incomparable with Visa and MasterCard. It will be very difficult to replace the national bank card system. It will take a long time for all banks to join.
A homegrown Russian payment system is also in the works, but that's not expected to be operational for another 2 to 3 years.
Quick look now at some of the day's companies' news, and more than 2,400 former bankers at Lehman Brothers have won a legal battle to have their pensions repaid in full. The former staff, all based in Britain, will receive a total of $306 million from the collapsed bank. The deal was negotiated by the UK's pensions regulator. Standard Chartered has been banned from processing risky dollar transactions for certain clients of its Hong Kong unit. It's part of the $300 million settlement with New York regulators we were reporting on yesterday. The bank's been sanctioned for not fixing problems with its anti-money laundering procedures as required by a ruling 2 years ago. And a former advisor to Barack Obama's election campaign has joined the private car service app Uber. David Plouffe will become head of policy and strategy at the company next month. He'll be leading the regulatory battles Uber is facing in cities from Washington to Paris.
Bit of a change of job there, isn't it? Well, finally, we're looking at some of the strange things that can move the market. Specifically today, Justin Bieber. Stephen will tell us why.
It's the Justin Bieber effect. This is to do with shares in the cosmetics company Elizabeth Arden, which closed down to over 23% in trading on Wall Street. And apparently, Justin Bieber and Taylor Swift are to blame for that. Sales in the company were particularly badly hit by a fall in demand for celebrity fragrances. Apparently nobody wants to smell like either Justin Bieber or Taylor Swift. Quarterly sales at Elizabeth Arden fell by almost a third. The company warning things aren't expecting to pick up in the 6 months. The next 6 months, that's of course despite a new album being announced by Taylor Swift.
Oh dear, it's the opposite of the sweet smell of success, isn't it? Thank you very much, Stephen Carroll, with a look through the business news there. Let's turn our attention to the newspapers here in France. Flo Villamineau has been looking at what's grabbing headlines today. Hello there.
Hi, Catherine.